One of Elon Musk's companies has revealed that it holds billions of dollars worth of Bitcoin. Hyperliquid and Zcash continue to explode, and Ferrari has announced that it now accepts cryptocurrency payments. And at the end of the episode, we'll jump over to Mexico to show you how the powerful SINALOA cartel has incorporated digital assets into its operations. Like, subscribe, drop a comment, and let's start. Our first stop today is one of the loudest crypto stories of the week. SPACEX has officially disclosed that it holds $1.45 billion worth of Bitcoin. This comes from documents filed with the US SEC. It's the first time we've received such clear and confirmed information about the aerospace giant's BTC position. According to the filing, the company owns 18,712 Bitcoins purchased for a total of $661 million. The position has remained unchanged since the end of 2024, which shows that SPACEX hasn't sought and likely views Bitcoin as a long-term strategic asset. This places the corporation among the top 10 largest corporate Bitcoin holders in the world, a strong signal of institutional adoption. What's even more interesting is that this disclosure comes just as SPACEX prepares for one of the most anticipated IPOs in history, potentially valued at $1.5 trillion. Although the documents don't directly link the BTC position to the public offering, the presence of such a significant digital asset on the company's balance sheet reinforces its image as a tech giant unafraid to bet on the future. It's also yet another sign that Elon Musk, despite his sometimes mixed public statements, continues to maintain serious Bitcoin exposure through his companies. Tesla, another well-known Musk company, also once held billions in Bitcoin. It later reduced its exposure and currently holds just over 11,500 coins, worth around $900 million. Despite the positive news from SPACEX, Bitcoin remains around $77,500, while many altcoins are down 6-7% over the past week. That's not the case with HYPE though. Hyperliquid's native token surged to $57, very close to its all-time high, marking a 45% weekly increase. This powerful return to higher levels is no coincidence. After traders aggressively bet against the price spike on May 18th and 19th, the market turned sharply against them. Funding rate data showed a massive jump into negative territory, a sign that huge numbers of traders were opening short positions and expecting a drop. Instead, HYPE did the exact opposite. It kept climbing, triggering a classic short squeeze. As the price rose, bearish traders were forced to close their positions by buying back the token, adding further fuel to the bull run. This is one of those moments when the market punishes overconfidence. Even more interesting is that open interest, the total value of all active futures positions, remained extremely high, close to $2 billion. Normally, open interest drops during mass liquidations, but here the opposite happened. While some traders were wiped out, new ones jumped in aggressively, attracted by the volatility and potential for quick gains. HYPE is currently one of the most actively traded assets in crypto. The major catalyst behind the move is institutional interest. In May this year, companies like Bitwise and 21Shares launched ETFs based on Hyperliquid, giving traditional investors exposure to HYPE without dealing with DeFi, wallets, or complex interfaces. Zcash (ZEC) is another cryptocurrency that has recently impressed with a strong surge. Its price climbed to nearly $700 after a 27% increase over the past week. What happened? First, the US SEC officially closed its investigation into Zcash Foundation without filing charges. This is a huge relief for the project, as privacy coins have faced heavy regulatory pressure in recent years. The fact that the SEC ended the case with no consequences is seen as a strong signal that Zcash is not considered an illegal security and can continue developing without legal uncertainty. This immediately restored market confidence. The second factor is purely market-driven. After months of low activity and downward pressure, ZEC finally broke through key resistance levels. This triggered mass short liquidations and accelerated the upward move, a classic scenario similar to what happened with HYPE. Analysts are debating whether this is a bull trap or the beginning of a larger trend. On one hand, Zcash remains a niche asset with limited liquidity, which makes sharp moves easier. On the other hand, the combination of regulatory clarity and renewed interest in privacy solutions could give ZEC new momentum. The next story is tied to one of the world's most iconic luxury brands, Ferrari. The company is officially expanding its crypto payment program and now accepts Bitcoin, Ethereum, USDC and XRP for purchasing its cars not only in the US but also across Europe. Ferrari partners with the payment processor BitPay, allowing customers to pay directly with digital assets without converting to fiat or going through complicated procedures. For Ferrari, this is a way to attract a new type of buyers. People who have accumulated wealth in crypto and want to use it for real, high-value purchases. For customers, it's a chance to turn their digital gains into something far more tangible and shiny, like a brand new Ferrari. Importantly, the company does not bear volatility risks, as payments are converted to fiat at the time of the transaction. According to Ferrari representatives, interest in this payment method is growing, not only among crypto millionaires, but also among traditional investors who keep part of their positions in digital assets. With the expansion of the program in Europe and plans to enter additional markets, Ferrari is becoming one of the first major luxury manufacturers to accept crypto on a global scale. This is yet another sign that crypto is gradually shifting from a niche experiment to a real means of payment, even in the supercar segment. Our final story today takes us far from the world of technology and luxury cars, bringing us to Mexico. The US Treasury Department has imposed new sanctions on the notorious SINALOA cartel after uncovering that the organization has been actively using cryptocurrencies to finance its operations, including fentanyl trafficking into the United States. According to the investigation, several key cartel members used Bitcoin addresses and other digital assets to move funds, pay suppliers, and conceal financial trails. The Treasury reports that the cartel built a network of intermediaries engaged in money laundering through crypto transactions. Some of the funds passed through mixers and exchanges with weaker KYC procedures, allowing the group to move capital with relatively little visibility. The sanctions aim to cut off the cartel's financial channels and make it harder to use crypto for criminal activity. At the same time, the case highlights something else. While cryptocurrencies are becoming increasingly integrated into legitimate businesses, from SpaceX to Ferrari, they remain attractive to criminal organizations seeking ways to bypass the traditional financial system. That's where we wrap up, friends. Have a great and successful day and see you soon.